You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options. Facebook.com/TheOptionsInsider or via questions at TheOptionsInsider.com.
Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody. That music means it's time once again for Volatility Views, the premier program for volatility traders. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-exciting Options Insider Radio Network. If I sound like I'm back to normal, it's because I'm back in the Chicago studios, the bosom of all things options here. It was fun being down in the southern studio, but nice to be back here as well, not really at the mercy, at the vagaries of the whims of the southern weather, which pretty much every time I cracked the mic down there, the skies opened up aggressively. Maybe the gods are trying to tell me something. I don't know, but I got a little bit of a complex towards the end because I would just turn it on and bam, thunder, lightning, and all other things. Luckily, mostly powered through. Didn't really have too many technical issues, which is good. But now we're back in Chicago, so all that stuff is behind us. What isn't behind us, though, is, of course, some fun stuff to talk about. You guys can join us in the usual fashions. You want to hit us up live? That's every Friday, noon Central, right about now, 1 p.m. Eastern. Or, of course, you can grab the podcast via our website or iTunes or wherever you get it, Stitcher, TuneIn, Pocket Cast. We don't judge. Go crazy, subscribe on your platform of choice. Or, of course, you can go deep into the archives on our website and even deeper in our mobile app. So we have a plethora of layers available for you guys to really sink your teeth into the delicious meaty sandwich that is Volatility Views. And of course, however you do so, live after the fact, podcast, website, whatever your choice. Make sure you hit us up, questions, comments, insights. A lot of things going on in the world of volatility, and we do like to hear from you guys. And joining me to help me break down this just crazy world of volatility is a guest who hasn't been on in some time, old friend of the show. Good to have him back on. He is Mr. Bill Valentine of Valentine Ventures. Bill, welcome back to the show, sir.
Well, thank you. I'm just excited to be able to participate in eating the meaty. What did you say? Meaty sandwich?
Oh, I have so many descriptive terms, sir. They fly from my head the second I say them. So who can keep track of all the adjectives flying around here?
It's a wonderful visual. It's a ketogenic reference, all protein, fat, and meat.
There you go.
So, yeah. Thrilled to be back.
All protein. We trimmed the fat here on Volatility Views, which is why there's no meatball today. He's too fatty. No, he'll be joining us in a little bit. He's got to get his house in order over there with probably got some issue in the Costco beans aisle. We shall see. He'll be joining us in a little bit as we get right into our volatility review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
Man, one thing I forgot about being back here in the studio is how loud that is in my headphones. I need to turn that down over here and see if someone can adjust that for me. Thank you. All right, here we go. Welcome to deafening myself over here on the show. Welcome to the Vol Review. This is indeed the portion of the program where we break down the week that was and indeed still is. Some about trading, trending, analysis, research, all that kind of fun stuff, perspective. And if you've been paying attention to the markets, and you probably have because you're listening to this show, then you know that we're in it. We're in it, folks. It is happening. It's official. Trade war. Hashtag trade war 2018, hashtag whatever you want to call it out there. This is the thing we've been worrying about and hemming and hawing about for many months here. Now it's been driving broad equity volatility. It's been driving volatility in a lot of other products out there as well. In fact, we have a flash poll up about that right now. We'll get to that in a little bit. But one thing it's not doing right today is driving or spooking the markets. After all this hand wringing, after all this Sturm und Drang, will they, won't they? What are we going to do with this trade war? Will China fight back? Will the EU fight back? All these other things. Here we are today announcing the trade war, China announcing we're punching right back. And what's the market doing? Is it selling off? Is it in a tailspin? It is a tizzy. Nope. It's up nearly a full percent in the S&P, up about 0.8%. Dow, a bit of the laggard, up about 0.5%. And tech-heavy NASDAQ saying we don't care about no stinking trade war, up over 1%, 1.3%. VIX certainly don't care about no stinking trade war. VIX off about 1 1/3 handles or so, right around the 1370 level out there. So let's start with that, Bill, because it's been a while since you've been on the show. The trade war has kind of been percolating, been brewing for quite some time. And now it's here, and I guess the party's on. I don't know. What's your take on all this, sir?
Well, it's hard to make sense of it, right? When talks of a trade war grew out of the saber rattling by the United States in terms of tariffs, markets sold off. But they didn't sell off a lot originally, which said either the markets don't believe it's going to happen or they didn't believe it would be consequential. Markets have since sold off more, but now that we're seeing it, it seems that we have sold the rumor or sold the news and sold the rumor and bought the news. So the question is what does it mean? What does it mean for equity markets? Does it mean that tariffs in and of themselves will not put enough of a crimp on global corporate earnings so as to warrant a sell-off in stocks? Or does the market think that this is all part of the Trump trade negotiation tactic, and that at some point, maybe months, maybe quarters from now, there will be concessions? Now, the president's view, and I think it's hard to assail this view. If I understood correctly, he made a quote which is essentially, "I'm for no tariffs. Let's have a trading world where there's no tariffs, any country, any product." That's fundamentally, I think, the right view, right? But we're not there now. And so if that's where he's trying to get, if the ultimate result of all this is that China sits down with the United States and either does major concessions or, in the 1% probability range, lifts all tariffs, that's fundamentally a very, very good thing. But what we know about Trump is that this is his tactic. He comes out super, super strong. He backs it up. He gets the other side to come back to it. It's classic negotiation. I mean, this is book that I read in the 80s. This is Art of the Deal, right? So either the market thinks that these tariffs and trade war, that it's not here to stay, meaning 6 months from now that we will, much of these tariffs will be lifted, or it just doesn't think that it's going to affect corporate earnings all that much because of the strength of the global economy. I don't know. I would have to say that so far, the jury's coming back saying this is going to be tough on foreign companies, because Chinese stock market, I think at last term from peak to trough is off 20%. So the market thinks there's some meat to this, but doesn't seem to be bothering the U.S. all that much.
Yeah, you're right. It is kind of a bit of a sell the rumor by the fact here, because that's kind of what the market's been doing for months. And now that it's here, it's been interesting. We're talking mostly broad equity and equity volatility. There are other areas where that have been dramatically impacted by this. Soybeans, certainly a big one. We've seen gold and others taking some hits as a result of this. We'll get into a lot of that, of course, coming up on TWIFO in about a little over an hour here, about an hour and 15 minutes. We got a little bit of a flash poll up there on our Twitter for you there to vote in right now. If you are so inclined, which complex you feel is going to have, which product's going to have the most vol going forward. That's the key of that question. Not in the past. We've seen a lot of volatility already. It's going forward with this as this trade war plays out. Which one you think is going to be the most impacted? We gave you 4 choices. We gave you kind of the broad equities like they have been so far. Soybeans, they've been a big one out there as well. Gold or crude oil. Let's just play along right now here, Bill. If you have a vote there, which of these 4 categories do you think is going to feel the most impact on this trade war going forward? Soybeans, gold, crude oil, or equities?
Soybeans, gold, crude, or equities. I'll just take a flyer and say crude oil, only because there's the overlay of the Iran problem right now. And, it's interesting. I don't know if you caught this, but Saudi Arabia, in response to Trump telling them to put more supply into the market, has at least agreed in principle to do that. On the other hand, the Iranians are ticked off, and they're going to do everything they can to jack prices. So I would say all those asset classes will see some volatility and continued volatility, at least until we get a respite from trade talk, with oil leading the way.
Crude oil, interesting. Crude oil is almost leading the way in our poll here. It's a flash poll, so it's going to be up really quickly. For pretty much you got the rest of the day to play in this one, listeners. So far, I went up just live before the show. We got soybeans leading the way, 41%. Crude oil, 36%. Equities, 14%. Only 9% for gold. So there still is a couple hours left for this one to play out. But yeah, soybeans certainly have felt the most impact. Currently, it's not a big leap to think that they could, perhaps as a result. But crude in the mix. A lot of things are in the mix over there. You know what else is in the mix we like to talk about a lot here on this show, Bill? When we're talking about VIX, we like to talk about our old friend VVIX as well. It has been pretty lofty. It has been well over 100. In fact, coming into this morning, it was back still around 103, which is pretty much unched from last week. As the market's kind of settled out a little bit today, it's come off a little bit. It's right about 97 right now, 96.5, off nearly 7 handles intraday. You had an interesting tweet. I think I actually mentioned it on the show last week, Bill, so you got a little bit of love even when you weren't on the show last week. You're talking about VVIX and kind of the percentile we were in last week with VVIX closing at about 114. You got any thoughts you want to expand upon or expound upon here, sir, with VVIX and maybe what you use it for and kind of where you're seeing it right now?
Sure, and I think this applies to VIX as well. So both, the VIX and the VVIX are projected estimations about volatility over the coming 30 days. In the case of VIX, it's the next 30 days for S&P related options. The VVIX, it's 30 days beyond that for the VIX. And while we talk about them in terms of the range, what I think we're learning, and I think this is an important point, this is backed by some research that's out there, is that both of these measures, VIX and VVIX, are actually measures of the elasticity of options. So the lower the level of VIX and the lower the level of VVIX, the more inelasticity there is for options, or elasticity there is for options, in that when demand comes into the marketplace for options, typically in response to hedging, you get a greater and greater reaction. So let's go back to February 5th, right? Largest single day move for the volatility index, for the VIX, for implied volatility. And then you say, well, why? I mean, that was sort of a trade related, maybe the Fed's going to be a little, I mean, it wasn't 9/11, right? It wasn't Black Monday. But it was the single biggest day move for VIX ever, at least in a point move basis. And the answer is it was exceptionally low, and the VVIX was exceptionally low. And so what I'm saying is, and this is also borrowing and giving credit where credit is due, Andrew Thrasher wrote a great paper about this concept, that low VVIX is an indication for an above average chance for a pop in volatility, at least through implied volatility. You know, we throw around volatility as if realized and implied are the same. They're not. 90% of what gets talked about when we talk about volatility is actually implied volatility. So let's just keep it in that vein. So basically, the VVIX can give you an indication of the elasticity of volatility-related measures going forward. So when VVIX is in the 4th percentile, which is what it was a few days ago or last Friday, when it's in the 4th percentile, the ability for bad news to move implied volatility is limited. When you started a VVIX of 114, VIX is not going to double based on anything that happens. When you start with a VVIX that's down close to the 50th percentile, around the high 80s, it's a different picture. Today, incidentally, by the way, it's back to about the 23rd percentile. The VVIX at 96 today, dropping 6 notches, is about 23rd percentile, meaning 75% of the time VVIX is lower than it is today.
Yeah, it has been an interesting one to watch. We typically call it out here on the show. It usually has this kind of range of, 75 seems to be a decent near-term floor for all things VVIX, and you get up to around 100, things start getting juicy and crazy up there. When things start getting north of 100, like they were when you were tweeting about it last week, up in that 114, up to even like 120, 125 range, then things are really, really interesting to watch. When you get north of that level, then all heck, shall we say, is breaking loose with the market. Is that kind of the range you put it in as well, sir?
Yeah, I think that's right. But again, it's not linear. So when you get up into the super high ranges, I mean, there's really very, very, I mean, it's at that point, option demand becomes really inelastic. You get very small moves. In that fat middle section, you get much more swing. And at the very bottom, when you have very low volatility, that's when you have tremendous elasticity for the prices of options. And that's what happened. If somebody said to me, what happened February 5th to cause VIX to jump so much on otherwise mildly bad news? And I would just say there was a tremendous spring that was set by virtue of the fact that 2017 had no volatility, and people stopped buying hedging instruments because it was an expensive waste of money, at least in their minds. And so it took 2 days for the entire world to try to come back in and get re-hedged. And in doing so, implied volatility of all options across all stocks and all strikes exploded, causing this VIX explosion that ultimately was the untimely death of the XIV ETF. So yes, fundamentally you're right. Those ranges are correct, but it's not linear. It's more curvilinear, and right now, I think we have some elasticity for a spike, but it's dampened for sure within the 23rd percentile for VVIX.
Yes, it is a fascinating. That's why we always say on the show, people who just throw out VIX is at X, that therefore the market will do Y, or the volatility is there's so much more to it. There's so much more context. It's pretty much, if there is a narrative that's been the crux of this show from the beginning, it is that you have to view volatility in the context of things like VVIX and where the futures are, where the S&P is, what the skew is doing. All these different things all come into play when you're talking about VIX. Speaking of the futures, let's look here and check in and see how the futures are looking right now. Like we said, VIX Cash right now, right around the 13.5 level or so right now. We're seeing the front month future about a little bit more than a point north of that, about 1.15 points or so. We're seeing 2 months out, the AUG future right around a little bit more than 2 handles, about 2.1 handles north of that as well. So a little bit juice, but not perhaps as terrible as one might expect. Billy, I know you pay attention to the futures out there as you're slinging things over there in Valentine Futures. Anything catching your eye in the term structure these days out there in VIX Futures land?
Well, this is the most normal the term structure has looked since basically the February 5th VIX explosion, where there's a reasonable premium between spot and month one, and a more normalized slope between month one and month two. You've got a nicely upwardly rising slope. The November, December, and the seasonal thing causes that to be flat between those two futures, but otherwise, this looks normal. And based on what I watch, I'm on Twitter every day, and I comment about every 2 weeks, but I watch it every day, and I follow a lot of retail and professional volatility traders. And there seems to be magic in their mind about this shape of a curve as an impetus for quote unquote shorting vol, some combination of using the ETPs, long or short, or selling futures or selling options. So I think this is the environment that I suspect will create more commentary on Twitter about now is the time to get back into doing what we did so well in 2017 that almost killed us in the beginning of 2018.
Yeah, and things of apparently killing Mr. Meatball's connection out there too as well. I think he joined us very briefly there, but we got to get him. He's got to get his stuff sorted out. We'll try to get him back Let's move on then to VIX land. The VIX, like I said, cash hovering around 13.5. Let's look at the options out here. Despite all the noise, despite the trade war, despite, we got the number coming out this morning, all that kind of mixing into what should have been a heady brew, a spicy, delicious cocktail here for VIX in terms of options volume. Not quite so much hitting the tape today, a little over 200,000, about 212,000 on the tape. Right about a little bit pushing up on 1230 Central here. ADV just shy of 500,000, about 487,000 contracts here. Again, looking right now in the OI, about pretty much where it's been for a while, about 2.7 to 1 calls over puts. Looking at, again, it's been kind of a shortened, truncated holiday week, and we're seeing that kind of reflected in the numbers out here. Everyone's on vacation, just getting back from vacation. Thursday about 212 hitting the tape, which is pretty much exactly today's volume was all of yesterday's volume. So I guess doing a little bit better out there today. Wednesday, of course, closed for the July 4th holiday here, so no paper going up. Tuesday, about 117,000 hitting the tape, kind of the nadir of the week there, and about 258, just a little bit north of 250,000 hitting the tape on Monday. Let's go out to the hot VIX strike land, see what people have been slinging, what they're putting on out there in VIX land. And number one with a bullet, again, we got this kind of July call strip kind of dominating the top 10 here. Still not quite as sizable as it has been out there in the past. Normally our VIX top 10, we see, numbers 450,000, 500,000, 600, 700,000. Not so much this week. Number one is a comparatively meager 197,000 contracts for the July 25s. Number two, we got the July 20s, 184,000. Number three, the July 30s. Again, the 30 strike continues to capture the imagination in spite of or regardless of whatever month you're looking at. July 30s getting 176,000 for number three. Right on the heels, the Aug 30s with 168,000 for number four. Number five, our first put on the list, the July 14s, 163,000 contracts open there. Number six, the Aug 28s. So if the 30s were a bridge too far, here come the 28s with 160,000 contracts. Number seven, the July 29s, $150 open there. Number eight, the July 28s, 149.5. So just shy for the number eight spot. Number nine, the July 17s, the comparatively quite reasonable July 17th, 143,000 open there. And rounding our top 10, our second put and last, obviously, put on the list, the July 11s, 143,000 contracts open there as well. About 7 million contracts outstanding, about 1.9 million on the puts and about 5.1 million on the calls. Mr. Bill, anything standing out to you about either those top 10s or perhaps any interesting paper you saw out there in VIX options land this week?
No, I think back to the prior point about the normalization of the term structure of the futures of VIX. This is the normal situation you'd see in VIX options, where it's the vast majority of demand and interest is in hedging. It's mostly always, as you always call out, Mark, kind of the 20 plus to up to 40s VIX calls. That's where the option volume is. Let's be candid. SIBO created the VIX. SIBO created the demand behind VIX instruments, and has done so remarkably to the point where it became pedestrian thanks to the evolution of the ETPs. So where are we in 2018? We're exactly where the SIBO wanted us to be. We have a high demand for options and futures based on this thing they call the volatility index. And it's used to hedge. The net long VIX and volatility story didn't change. This whole nonsense of there was a short vol crowded trade was always BS, still is BS. The vast majority of non-commercial interest is and will always remain net long volatility for hedging purposes. End of story. That's where we are today. Huge volumes, as you just called out. I was kind of looking at it. I don't have the list, but I was looking at it on my trading terminal. Of options that should do very well if things get really, really dicey. And that's the story. It's taken us a while since February to get back to a normalized picture, but that's the picture that I see this being painted today.
Uh-oh, that background noise can only mean one thing. He lives. Ladies and gentlemen, we are joined by the greasiest of meatballs, fashionably late, about halfway through the show. Mr. Meatball, do you live, sir? Welcome back to the show.
I do, and let me apologize. I was given a presentation to some high school kids, and what can I say? I was so fascinating. They just kept peppering me with questions. They wouldn't let me leave. But here I am now to bring our listeners' ears the joy of the melodic sounds of my voice.
You had high school kids who were interested in VIX?
Nah, we were just talking the basics of stock ownership and what that really means, things like that.
I was going to say that's a little deep for your average high school home ec class.
Indeed.
Balance your checkbook, and here's the term structure of VIX futures. So, Mr. Meatball, it's been a crazy day. Bill and I were just expounding upon it for the better part of the last half an hour or so. You know, the trade war, markets apparently fading it. Non-farms, apparent markets loving it. What's catching your eye in today's kind of craziness?
You know, it's the second day in a row where we look real strong. And, you know, the last few weeks, I think what's been kind of fascinating is the Russell 2000 and how that has really been the leader of kind of the major indices. When the Russell's been strong, so has the overall market. And when the Russell has not been the leader, that's what's really caused problems for the overall market. And we saw runs go away. So here we are today. The Russell's about even with the S&P, and the NASDAQ's the big leader. This looks like a pretty decent move. I'm also watching a VIX that seems to be normalizing back. It was, given the amount of movement that we're getting the last couple of days, yeah, we had that one day where it's a little bit of a sell-off. Really not nearly kind of the excitement that the VIX was holding up. And right now it's right around 1360. I would not be shocked if it got below 13 by the end of the day. I think we're potentially on pace for that.
That wouldn't look bad for our prognostications coming up later in the show, as we were both, I believe, shy of the 13 handle for this week. So, yeah, that wouldn't look bad. It does seem, Mark, like we were saying kind of earlier in the show, this is kind of a little bit of a sell the rumor very aggressively for multiple months, and then buy the fact pretty hard when it happens. Is that your takeaway
as well? I guess so.
I mean, what else can you make of this kind of? We've been kind of wringing our hands over this for months now. It's causing volatility in all sorts of complexes, not just equities. We touched on it earlier, ags, crude, gold, you name it, all kind of feeling the impact of this looming trade war. And then we get here today and yeah. So I guess that's the case. If you've been pounding something for months, so the market's kind of done with it by the time it happens. We have very short attention spans. Short attention spans is something that also helps a lot, or at least we see a lot out there in VIX options land. We just broke down the top 10 hot strikes. Oh, by the way, Bill, but you just touched on something. I wanted to get back to it before we got the meatball on here. You were kind of mentioning what's going on with long vol, how the market is biased. Long vol. Clearly, you didn't read the big treatise out of FT a few weeks ago. We discussed it on the show, where the conclusion of that academic was that there is no more interest in long vol. That's why nobody is out there buying VIX futures. Not the debacle that was XIV and SPXY and their lack of demand for the product. So apparently, Bill, you didn't get the memo. Nobody is actually interested in long vol anymore, according to FT, at least.
Okay, good to know. Thank you.
So yeah, I just wanted to correct you there because
that's like a Gartman indicator.
Oh my, yeah, that is that's ridiculous. Nobody's interested in long vol. Yeah, the lack of understanding of what long vol really means is also hilarious. Because nobody buys put options in the S&P. Nobody buy, there's VIX futures and VIX calls. Nobody's buying VXX way out of the money call spreads or anything like that, right?
Yeah, it was kind of funny. I forgot the name of the academic. I'll have to dig it up. We talked about it a few weeks ago here on the show. It's one of those ones that just kind of sticks out to you as kind of just like, maybe this person has a different take than the rest of the folks out there. Talking about VIX option, what they're trading. Does seem like maybe it's risk reversal season out there. We talk about different trends in VIX options land. You know, the short 1x2 was the trade du jour for quite a long time till it wasn't. And then it was kind of a lot of upside fading, even though, as Bill said, it wasn't as crowded as it got put out there. And, of course, we know no one that's biased to be long ball right now, so we'll just put that out of the way. But a lot of VIX risk reversals hitting the tape today, at least, for some reason. Looks like the SEP 1425 went up. Not a ton of size because it's a light day, but about 5,000 contracts going up there. Looks like doing it for about close to even money, buying the call. Probably, again, the executions are always a little interesting out there in VIX land. Also, looks like we got an AUG 1517 upside vertical being financed by some AUG 15 puts. Doing that about close to 4,000, 3,200 to 4,000 times, depending on the leg. So some decent size up there and some risk reversal. It's been a while since we've seen risk reversal action going up in VIX land. On a quiet week like this, it kind of stands out. Mr. Meatball, anything else catching your eye out there in VIX options land this week, sir?
You know, this was not the busiest week for VIX options. I will say that.
117,000 contracts on Tuesday doesn't catch your eye, sir?
Yeah, there was some stuff in double X, but not a lot of VIX stuff this week for some reason. Almost nothing that is really interesting.
Except for all those size risk reversals that went up today.
Yeah, I mean I guess that's it. I'm looking today, and this is, how about this for Mark's weekly rundown? The July 11th 14 puts 1,500 have traded on the day, primarily 50 cents, although one smart trader bought 100 for 45.
So what you're saying is 50 Cent is back and he's buying puts now is what you're saying? Maybe,
but that's a decent amount of volume that's traded in those today. So that's a little eye-opening. Maybe the market is starting to price in a low settle next week. You got some decent volume on like the quarter calls in regular July, but yeah, there's just not a lot of real crazy volume today. Almost none.
Where there is some interesting volume afoot is in our old friend VXX. It continues to give up the ghost today, off about a handle and a half, right around 34.5. That puts it pretty much about a half a handle below where it was last week. So we saw all this kind of Sturm and Drang popping in VXX and coming back off and popping and coming back off. But we've kind of been around this 33 to 35 level for the better part of the last few weeks out here in VX, at least on Showtime. Every Showtime it settles in to that range. People have been trading this one. Mr. Bill, I've asked Mark 100,000 times, so I'll ask you this week. I'll turn the tables a little bit. If you had to go out right now and not looking at the show notes, because that would be cheating, and just had to wager on your own, what would you say is the number one options position right now in VXX, sir?
In VXX. And I didn't look at the show notes. God forbid I be prepared, as is evidence in the quality of my presentation today. If I had to guess, I would say with VXX at 34, I'm going to guess it is the people love round numbers. I will say it's the, let me see what the period is today. This would be, I'm guessing it's the August 17th. Let's say it's the 50. Long VXX calls, August of 50 strike.
Wow, interesting. That makes quite a bit of sense. I could see why you would say that, and also horribly wrong, sir. No, it's all downside. It's all long, except for numbers 2 and 3. We'll get to those in a little bit. It's the Jan 10 puts, our old friends, 201,000 open. Does that include your, what was it, 1,000, 2,500 last week,
no.
Mark?
I bought 3,500 more today for a penny.
I think we had a listener write in to ask if he got filled, so I'll just let them know.
Yeah, I've been buying these. I've been buying these for a penny. I've got so far on the day, I have let's see, 35, at least 3,500.
So you're the reason the OI keeps growing every week. By the way, you might want to tell your risk manager. I was chatting with him about these last week, and he did not seem to take a positive view on these.
Well, for a penny, I think I'll get a chance to sell these at 9 cents. What if I make 8 cents on 5,000 contracts? How much do I make?
Yeah, I had that conversation.
It's a nice little bet.
They don't have to obviously come into the money. I think he was looking at them from the their viability of coming in the money, but that's not really.
No. They just need to become reasonably. So if VXX, if we get a real dip in VIX, and VXX makes a run at 20, those will explode to like 8 cents, and then I will unload a chunk of these.
Yeah, we saw that. We've seen that with a lot of these little garbagey puts they have. These things have traded higher before. And so now with 201,000, Meatball accounts for, 30% of the open interest on this strike. We shall see. But of interest, too, Mark, you were mentioning last week you thought this guy took it off. But apparently it's still on, this July 70-90 vertical in the VXX, because that's still, at least coming into this morning's numbers, there's still about 100,000 open on both of those strikes. So were you hearing that he took it off?
It was supposedly a close, but maybe he didn't close the whole thing, because you're right. The July 70s have 96,000 on them, and the 90s have 101. And actually, 4,000 of the 90s have traded today.
You know what else was trading today, sir? Since if that's listeners, a lot of you have written in, you were inspired or perhaps horrified by that VIX, or I should say VXX vertical, and decided to take the other side of that. Well, we got more for you here today, because more size in the upside trading in VXX, this time a little bit closer, or I should say a little bit farther away from July. Maybe our friend decided that July it was a bridge too far. He's bringing it a little bit farther down, but a little bit farther out, give himself more time. We saw the AUG 47.65 vertical going up, looks like for about a buck, and doing it 23,000 times opening on both strikes. So, Mr. Meatball, how does that one stick in? Maybe you're not a fan of July 70-90. Maybe AUG 47.65 fits more into your risk profile?
I mean, that's got more of a chance. I mean, at least the 47.65. I mean, when we had that huge pop, at least VXX in like February got into that range. I believe the top for XX was 56.50. So at least that you can get there. 70-90, we didn't even get close. This thing has not been above split adjusted. This thing has not been above 70 in over 2 years.
Yeah, yet people continue. They persist in their upside love. Bill, I thought it was interesting. Your first choice was the AUG 50s for the number one position. So maybe these AUG verticals, what are your thoughts on all this size paper going up in VXX and AUG verticals? And what I know you've come on the show before and expanded on length upon VXX erosion and the drivers therein. What is your favorite use case out there for VXX options these days? Is it these upside verticals? Are you on the long put train like everybody else?
Me?
Yes,
Me,
Bill.
Mark?
You would be the Bill.
Well, yeah. So, here, I have a view that's not real popular, and that basically is centered around this one concept, which is that there's really only two VIX ETPs that have any justification for existing anymore ever. So I'd like to have all of the rest go away. And if you look at things like the option volume in SVXY and whatever else, you're seeing this consolidation. So I like the VXX and I like the ZIV. I think the rest of them really need to go away and should be avoided and should have always been avoided. That being said, the volume in VXX options makes them, in my opinion, if you're doing anything long, short, speculative hedging involving ETPs, using any of them, the best way to counter that position, if you want to do something in the option side, is to use VXX, because there's a tremendous amount of volume relative to anything that you have in mind. So, yeah, if you want to be, you want to take the long bet and hedge your volatility, long calls, call spreads, 1x2s, ratio spreads in the upside, all of that is great. I do think that they perform a real valuable function, the VXX, because they behave differently than VIX, principally because of the difference between the European and the American settlement. So VXX has some staying power. When you get a spike of volatility, the VXX stays up, the VIX immediately starts to go back down again because of the difference in the expiration. So I like them. I think you can use them. I think people should use them. Hedging, speculating, calls, puts, selling, buying. Pretty easy to track. Bid-ask spreads are narrow. So it's really about the only ETP market where I would ever buy an option because of the volume. So I like all those trades. I think people, if you're sophisticated enough to trade an option and you're considering trading VIX, you can use the VXX option chains just as well as you can use the VIX chains with sufficient volume and decent bid-ask spreads.
So is that a long way around to saying that you don't currently trade any VXX, but you would if you were so inclined?
No, it's not that way of saying it. I actually have a short position on VXX almost at all time in one or both of my funds, of my two volatility funds, and I will use oftentimes VIX options to supplement that, either on the selling side to get a little bit of a boost, or on a way out of the money basis to protect the short position in VXX.
And what's your go-to short VXX play? Are you like a long-term put spread guy, or what's your poison of choice out there?
It depends. Depends on where we are in the direction of volatility. It depends on where we are in the direction of VXX. It depends on the skew that's out there. I think that anybody that's doing any form of short volatility, if they didn't learn this coming into February 5th, you needed to have some kind of an offset, some kind of a reinsurance, right? If you're selling the insurance that people are buying in the form of whether it's VIX or an ETP, you need to reinsure yourself with just a pure long play, either that's a call spread or more often than not, it's just a pure long call. I mean, if you want to talk about bang for your buck in hedging, a VXX out of the money long call. Previously, you could say that about the UVXY until they completely bastardized their own covenants and changed their leverage. So today, I think the best use of a VXX option is hedging against short vol if you're in that world, and you can do so just by owning long calls, 90 to 60 and rolling them forward, or 60 to 30 and rolling them forward. They're a really dependable vehicle. And when you get a spike, the problem is when you get a spike, a big spike, like a February 5th spike, spreads on the VIX explode. It's virtually impossible to trade well as it is spiking. VXX is narrower because you can imply what the value of that option should be at that time, because if you can put the shares or you can call the shares if you have them. So it keeps the spreads narrower, which is why I like using those.
Interesting stuff. A lot of our listeners like VXX too. We'll get to some of your questions in a little bit. We got a bunch hitting us up really quickly. Quick rundown of some other vol. We'll get to more of this in about a little less than an hour, about 45 minutes on TWIFO coming up. So if you're listening to us live, stay tuned after Vol Views. We'll pump something fun into the live stream for you. There's another show, and we'll be back here at 1:30 p.m. Central for talking some commodity vol. But right now, the commodity vol actually coming off a little bit. It was spiking earlier this morning. We saw the crude VIX, a.k.a. OIV, right around 28.25. That was about 2.25 points higher than where it was a week ago on the show. We're seeing a similar story out there in gold vol. Look at our old friend GVZ. It's off about almost 0.75 points, which puts it pretty much about 0.75 points lower than where it was last week, at about 10.67. Gold vol's already kind of been coming off a little bit again today. You know what's not dropping off, though, is the pace of your questions. Let's get to them. It's time for some of the volatility voicemail.
It's time to share your thoughts and opinions with your fellow volatility traders. It's time to check the volatility voicemail. Make your voice heard by dialing 779-669-4VOL. Posting a comment on the optionsinsider.com, sending an email to questions@theoptionsinsider.com, or posting your questions to twitter.com/options. or facebook.com/theoptionsinsider.
All right, everybody, welcome to the Vol voicemail, the portion of the show where you guys take the reins, questions, comments, insights, all sorts of fun stuff going on. We like to turn the tables on you guys as well. I just mentioned one of them before that Bill and I were discussing here regarding which complex do we feel has the greatest potential to get a little bit more vol going forward here with the old trade war. Right now, it stands at about, looks like we said before, soybeans were leading the way, and soybeans is still leading the way, 42%, 38% for crude oil, 12% for equities, 8% for gold. If you're listening live, you'll have a chance to vote. That's a flash poll. That won't be up for too much longer. Get in there now. Listen after the fact. Sorry, folks. That was a quickie. What's been lasting a little bit longer this week is we asked you guys out there, people like to trade, or I should say fade volatility going into holidays like we saw this week, or maybe didn't see this week. That's another interesting wrinkle to this. So we asked you guys, what's your favorite vehicle when you want to go dark side on the volatility space? You can tell us what you like, short term or long term. It's kind of up to you. We gave you 4 choices. You can go kind of the old, diving into the fire short VIX futures way. You can get a little bit more reserved with some long VIX puts or put spreads. You can get even more out there reserved and far away with the long VXX puts or put spread. Or you can go back a little bit into the fire with the short VIX calls or call spreads. Billy kind of just mentioned, you're a guest, I'll start with you. You kind of just mentioned your fondness for some short VIX, or excuse me, short VXX. When you want to go dark side in the vol space, what's your poison? Are you more of a slinging shorten the VIX futures guy, get right in there? Are you more VIX puts? What's your weapon of choice?
I like selling the VXX. I like selling the front 2 months futures when there's steep enough contango. Contango not being measured between month 1 and month 2. Somehow that's taken over in the conversation of volatility. But the contango is the spread between the future and spot. So I like to sell when there's steepness there. And then I like to reinsure it in some form so that if we have a VIX explosion, I don't get killed.
There you go, Mr. Meatball. Same question for you, sir. What's your favorite weapon for shortened VIX? And then also, what do you think our audience is voting for out here? Mr. Meatball, sir, are you alive?
I like VIX itself. That is my favorite. I am all about VIX itself.
VIX futures, I'm assuming there.
VIX options. I think that has an inherent hedge, which I like, and it makes my life a lot easier. I'm not running around going crazy.
All right, I'm going to put you down then for long VIX puts or put spreads.
Yes,
there you
we'll go long VIX puts.
All right, so then you are in the same stock as about 16% of our audience. Only 16% going for long VIX puts or put spreads. 32% right now saying long VXX puts is their preferred way to get to express a short view in volatility. 30% coming out saying they want to just go guns blazing right into the short VIX futures, and 22% coming in short VIX calls or call spreads. You got like through into the weekend to vote for that one, listeners. If you haven't already, get out there and express your views on all things short vol. Let's see, we got a bunch of questions. Let's see what we can fit here. Here's an interesting. We were just talking about VXX. Elvist wants to know: are you guys as surprised as me by VXX's stubbornness? He refuses. He says, to break the 30 handle. Well, I'll go first. No. I mean, we talked about it a lot here on the show. There's a lot of things going on out there that continue to give a little bit of life to VXX. That's not saying going forward, if the response to the trade war is this going forward, that we won't break it. We might, who knows, might break it early next week at this rate. But for now, given all the things we saw, all the known unknowns floating around in the marketplace, I'm not quite. I was not expecting a VXX of like 25 at this point this week. Maybe you guys were. I don't know. Maybe Bill, we'll start with you. Are you as surprised as this listener that VXX continues to refuse to break the 30 handle?
Well, again, that implies some kind of technical analysis. That there's some meaning to the number 30 or 31. There isn't. But no, the answer is there's been no volatility risk premium, and the term structure's been flat. So that's what you should expect. VIX has been bouncing above and below the front month and the front 2 months futures for the better part of the last 3 months. So there's been nothing there to cause a short position in the front 2 months to produce a return to the seller of those futures. So until we have spread that represents the risk that the seller is taking or getting benefited for relative to the spot. And until there's a more normalized term structure like there is, at least for today, you would not expect VXX to make much progress on the downside.
Mark, same question for you, sir. Are you as surprised as this listener? Or are you kind of like us, kind of like, it's what you expected? Mr. Meatball.
I think he's talking to the teenagers again.
I think he is.
Yeah, no, it's what I expected. It is absolutely what I expected.
He is indeed talking to the teenagers.
It's another meh.
Whenever you talk to Mark, you can always have a 35 to 50% chance that he's talking to some teenagers there in the back. It's kind of what he likes to do. All right, moving on. This is kind of a comment/question from Casey. They say a lot of people asking, is it them or is it us? It's a C. Is it me or is the vol space much more boring after XIV, SVXY? Those are my two faves. Seem like there's not much to take their place. What's the new short vol play? Well, we kind of were just discussing this, Casey. Our audience clearly likes, what would they choose? They like VIX futures, shorten VIX futures, and also long VXX puts. We were just talking about that. Bill, you were just kind of saying the same thing a little while ago. You think the rest of the post-XIV, that the rest of the kind of vol ETP space should kind of go away. So it sounds like you agree with this listener here, Casey. What is your new? Is there a new sexy ETP that has taken their place in your eyes, sir? Or are you kind of just like Casey and a lot of us kind of just resigned to this little bit more boring vol space?
Well, I've seen in all sorts of product categories since the advent of the ETF that somebody gets an idea and the companies come out and they introduce 25 products around it. And in the last 5 years, it's been volatility. And originally it was long futures, short futures, and then it was like, we're going to do a mix of long this future and short this future. And all of those products have either been killed, taken off the market, or been a failure. So, like I said earlier, I think there is a case for a product like the VXX. I think there's a case for a product like the ZIV. I just don't know that we need the investment banks to come out and introduce another 20 products to take place of the 20 products that were a disaster and have gone away. And I just don't think most of these ETPs are ever going to get any real volume, but there'll always be a little bit of room for a couple of them based on the volatility index. So I'm personally happy to see this because it's kind of taken away the pedestrian influence on volatility. And, mom and dad aren't owning XIV anymore. That's nice. If you want to short volatility, do it in the options and futures market where it was designed to be taking place, and do so less so in the ETP market. So I'm kind of happy that this the natural culling of the herd has taken place, and I just don't think we're going to go back through what we went through the last 5 years.
Mark, you concur with all that, sir, that with Casey or with Bill, that, the vol space is maybe a little bit more boring now, or with some of the death of some of these marquee, shall we call them, products?
Yeah, I'd like to see something come in and replace UVXY again, and something maybe replace SVXY, which were usable products. And I'm with Bill. We don't need 5,000 products. Everybody's trying to replace the VIX. Nobody's been able to do it. Nobody ever will.
Yeah, even SIBO has a strong challenge on their hands trying to come up with the next flavor, the next iteration of VIX. As we move on to our next and final segment, it is time to bust out the crystal ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, everybody. Welcome to the crystal ball, the portion of the show where we just attempt to wrestle the slippery pig that is VIX Cash at this time, end of show time every week. You can listen for a while. I went on quite a run there of almost exact bullseye precision. This latest iteration of the trade war has been not so good for my prognostications. We were both off like crazy, many handles last week. We were both around the levels we are now. And VIX Cash is not playing ball. VIX Cash was about 3 handles north around the 15 handle. This week, it's coming in a little bit closer, playing a little bit more ball. We're all still pretty much off. I was at about 12 double, which is about a handle below where we are. Meatball a little bit closer, 12.95. He's about 0.65 off of where the VIX Cash is, right around 13. 60 or so right now. So I'll give him the winner chicken dinner this week. But since none of us were really super bullseyes within like 0.1, I will be even more generous, and I shall give the nod to our guest to guess first this week. Mr. Bill, that means you're up. What are you feeling for the VIX Cash this time next week, sir?
All right, so VIX right now is 1363. I'm going to take 1363 for this time next week.
Are you pulling a meatball, just guessing wherever it is right now?
No, I mean, I think that 13 is the mode for VIX. It's the most common level of VIX is 13 over time. To suggest otherwise would be to suggest that I think I know which direction the market's going to go between now and then, and I don't. So I think, I mean, just statistically speaking, if you had to pick a number to be right, you always pick 13. And, oh, by the way, I don't think much is going to happen in the next week. This is a very normal-looking market, and absence of surprise, we'll be exactly where we are now this time next week.
Interesting. Meatball, perhaps taking a cue from your playbook of keeping things the same for next week. What are you going to come out and do the same thing? Are you going to tell me $12.95 for next week, sir? Or you got something else in your back pocket?
I do have something else in my back pocket. Are you ready?
$12.94.
$12.90.
I knew it was. Once I set that up, I knew it was coming. $12.90. All right. I love going last, and by love I mean I don't, because it gives me interesting range. We're at about 13, like we said, about 13.63 or so right now. Meatball $12.90. Bill saying pretty much unched. Let's see. That gives me room to the upside, which I'm not really feeling, and room to the downside. So I'm going to go back. I don't like usually echoing myself week after week. I like to put more into it than that. But I'm kind of liking where I was last week. I'll tell you what. I'll do a meatball. I'll pull myself a 0.05 lower as well. I shall say 12.5. There we go. Everyone is accounted for. We shall see what the VIX accounts for itself this time next week. Unfortunately, listeners, that music means we've come to the end of another epic sojourn through the world of volatility and how epic it has been. We've talked VIX futures, we talked VIX options, although the lack thereof this week. We talked VXX and the myriad ways to trade it or perhaps not trade it, depending on your viewpoint. The myriad ways to get short vol, if that is your inclination, which seems like for a lot of you out there, it is. We talked about vol and other product complexes like the commodities. If that's your bag, by the way, like I said, stay tuned. We'll beam some fun stuff. If you're listening live into the chat, we'll be back in exactly half an hour to talk some commodity vol, talking crude, talking gold, talking equity, more equity vol there as well. Russell boys will be joining us for that and a bunch of other fun stuff. So stay tuned for TWIFO in about half an hour. But before we go, let's go back around the horn, see what everybody else is cooking up. Let's start. Bill, you are our guest, so you get pride of place, sir. What is going on in the land of Valentine Ventures? And if people are interested, by the way, if you want to give the man a follow out there on Twitter, and you should, he tweets some interesting stuff like that VVIX stuff I was talking about earlier in the show. He is B Valentine CFA on Twitter. Give the man a follow. He's got some good data coming out there and little nuggets all the time. That said, Mr. Bill, what's cooking in the land of Valentine Ventures, sir?
Nothing. A whole lot of summer. That's it. Nothing going on. If people want to follow me, just like you said, Mark, follow me on Twitter. Happy to do so. Send me your questions. Love to talk to people.
There you go. Follow the man, B Valentine CFA. And you too can ask him questions. Talk about VVIX. He loves talking about VVIX. We'll talk about it all day long. Mr. Meatball, what's cooking in the land of Carmen Line and the option pit, sir?
You know what? It's the last day. So Monday was my 40th birthday. And if you use code Happy Birthday Mark, the HVM capital, then you will be you get 40% off for my 40th birthday.
There you go. Head on Option Pits. Check out. Maybe you want VXX made easy for yourselves. Maybe you want something else cooking out there. Either way, good stuff. Thanks to Bill, thanks to Mark, and on behalf of each of them, I want to thank all of you out there for downloading, streaming, and subscribing. Stay tuned if you're listening live. We'll get some fun stuff pumped out to you in the chat, and we'll be back to you forthwith in about half an hour with some TWIFO.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.